Hello, everyone. Thank you so very much for joining us, and welcome to the third edition of the TradeTech Showcase, brought to you by GTR Ventures. The United Nations Trade and Development Agency estimates that the current pandemic will cost the global economy about $1 trillion in 2020 alone. Indeed, this year revealed major weak spots in the still very traditional sector of trade and supply chain. We've seen entire economies paralyzed, supply chains disrupted, and large-scale frauds pushed into the open. As a consequence, technology applied to trade and information flows is now more than ever a strategic priority to help global trade become more resilient, transparent, and inclusive. My name is Dimitri, and I will be your facilitator today. I am a former banker, co-founder of two trade finance fintechs, Incomeland and LC Light, and industry mentor for GTRV. We are joined today by four of the most promising startups in the trade technology innovation space. They will be evaluated by you and judged by our panel of high-profile experts representing world-class global organizations. By now, you have seen their videos posted at 10 a.m. today. Those of you who don't have or didn't have the opportunity to see the videos, you can go on the GTR event platform to the agenda section and click Demo Lab available on demand. You can see the videos there. The winner of this showcase will receive $10,000 worth of Amazon Cloud credits, and we really thank Amazon Web Services for this generous prize. The winner will also receive 3 hours mentoring by ReefNot and GTRV on the pitch. So before we start, some logistics announcements. So during the panel, please post your questions in the Q&A section chat in your GTR application window. Also, while the startups get grilled by the jury, you will be engaged with some polls during each panel. So please share your opinions with us. At the end of the panels, you will be asked to vote for your favorite startup. We will see if your vote actually will correspond to the choice of the jury. It will be interesting. The winner chosen by the jury will be announced at 4:50 p.m. today by Rupert Sayer. And after this panel showcase, we will have a networking breakout sessions at 5 p.m. So without further ado, let me introduce you to the honorable members of our jury. We have Mark Dragon, Managing Director and CEO of ReefNot Investments, a global VC firm focused on supply chain and logistics technology startups. ReefNot is backed by Temasek and Kuehne+Nagel, a global leader in supply chain logistics. Hello, Mark. Welcome.
Thanks, Dimitri, and thanks, GTR, for inviting me here.
Thank you. We also have Yasmina Israr, Head of Marketing and Innovation Asia Pacific at the COFAS Group, a world-leading trade credit insurer. Hello, Yasmina.
Hi, Dimitri. Hi, everybody. Thank you.
Great to meet you. Great to have you here. Last but not least, we have Lucas Chua from the ASEAN Startup Business Development at Amazon Web Services, a global leader in cloud computing. Hello, Lucas.
Hey, Dimitri. Hey, everyone. Great to be here.
Good to have you here as well. Okay, so we are going to resume the panels now with Cargo Chain, then Karma, followed by ManHub, and finishing with Tramas. I will invite the public again to ask their questions on each startup during the corresponding panel. So let's start now by inviting our first startup to join the panel with the jury. So first up is Jonathan Kohlhauer, CEO and co-founder of Cargo Chain, an information sharing platform with native blockchain capabilities. Just before we start, let me pull up a poll. So the first poll that we have will be asking you about some of the most important aspects that you think will change, will have an impact from a technology perspective on the trade and supply chain sector. So you should be seeing the poll appearing in your poll window anytime in the GTRV app. And there are several aspects on which you will be asked to vote on. So please share our views with us. So let's start with Jonathan. I think Jonathan is here. So I will let the jury open the questions and suggest we start with Yasmina.
Thank you, Dimitri. As I see, ladies first, so thank you. Hello. So about the question. So thank you very much for the presentation. It was very interesting. And so I believe like some of the players will really bring the trade at the next level. So it was a very interesting overview. My question is more about how do you structure the data? Because I'm still wondering how it will look like for the different parties who will have access to the platform. Is it a dashboard? Do you transform the data you will get in some analytics? How does it look?
So we don't really transform the data. I'm going to see if I can mute myself. Can you still hear me?
Yes, perfect.
Can you hear me?
Yes.
No?
Yeah, we can hear you.
Sorry, can you hear me?
Yes, we can.
Okay. So the data is structured inside of the platform. It's not really transformed, but what we do is we will work to normalize the data so that we have a very clear kind of apples to apples comparison. So when the different trading partners are sharing information, that they can actually see it in the same way that they would want to represent it in their own business. Yeah, I think that's probably the best explanation for that. But we don't necessarily provide an app. This is a platform. So our customers can build custom applications on top of the platform to suit their business.
Okay, thank you very much. Maybe Mark or Lucas, you can ask your questions as well.
Yeah, thanks, Dimitri. I'll have a go first. Thanks, Jonathan. As you shared the presentation, you started off with describing a little bit about the cross-border supply chain and logistics type flow, right? But the use case that you represented, the AAT case study, was more around info sharing and not necessarily that whole cross-border data sharing and supporting that flow. So that, you know, and because it's different, the types of documents and types of data is all going to be different as well. So who really are your target key customers, right? Is it the shippers, is it the carriers, or folks like AAT?
So it's really going to be when I say the shipper, that's anybody who's importing or exporting goods. That's who I consider to be a shipper. The carriers are going to be important for sure. The customs agents, the authorities, they're all going to be part of that. There's a good example, particularly with respect to trade finance. So we're working with the Bank of New Zealand, and the Bank of New Zealand has to track all of their portfolio customers and all of the assets that they're managing. If they're providing the funding for the trade finance, they need to understand exactly where in the supply chain that product is, whether it's work in process or whether it's finished goods. And so the Bank of New Zealand is working with some of their smaller to mid-sized businesses to really get an understanding of where is that product in the supply chain? Is it in the country? Is it in customs, or is it on the ship? Has it arrived in the importing country? And what's the disposition all along the way? And then they have to be able to have that chain of custody and understand exactly who owns the product at what point along the supply chain.
Yeah, but in this case, for Bank of New Zealand, what's the use case here? So is it inventory financing? Is it factoring? Or is it supporting letters of credit? What exactly?
It's inventory, yeah. It's inventory financing.
All right. So have you deployed this with Bank of New Zealand yet?
No, we have probably a half a dozen customers that are in pilot right now. Bank of New Zealand is one of those customers. So I would hope to see Bank of New Zealand go live by early January or February of this coming year.
Okay, thanks.
Okay, great. Thank you. Maybe Lucas, we can follow with you.
Yep. Thanks, Dimitri. Hey, Chris. So I was looking at the technology side. I'm sure your different clients have different applications running across their entire info technology structure. So how do you ensure that your APIs are all consistent and work together with their applications? Like, how is it integrated? Are you providing a new set of your custom built cargo chain applications for them to use on? Or how does it work? Because given that you say you're piloting with many different clients, I'm sure they're all using different sets of applications.
Correct. So we provide a solution development toolkit. So if they want to integrate their order management system or their fulfillment system or inventory system, they would use our solution development toolkit to essentially configure that integration into the API.
And what's the situation? I mean, how do you deal with legacy providers? Some of them, maybe their applications are so old that they can't actually expose the information to an API call. And what's the solution here?
Yeah, so I'm working with a company right now called the African Agriculture Finance Corporation. And that's exactly the situation that they have. They have legacy systems for their leasing, for asset management, for procurement. All of the asset disposition systems are all legacy systems. So that that requires a custom configuration for each of those legacy systems. Most of the customers that we work with today have some level of EDI capability, and so we'll in some cases piggyback off of that in their legacy systems.
Okay,
thank you. Great. Thank you so much. Thank you, Jonathan. Thank you, members of the jury. I think it's a perfect timing. Now we have some questions coming from the public. So there is one related specifically to cargo chain. The other ones I would say are more general, related to the landscape of fintechs and funding startups currently. So I would just go ahead and ask. The first question is, have the challenges of this last 6 months brought about new trade market challenges that fintech can help solve? Jonathan?
Well, for sure. I think it's a whole new environment for everybody right now. And we've seen just a rush of interest from whether it's federal governments to large enterprises and small enterprises. We're working right now with generic pharmaceutical manufacturers in India, and they want very much to be able to export their product into the US and into Europe. And all of the requirements for the FDA or the equivalent in Europe to certify and be able to track and trace those generic pharmaceuticals, they need some sort of an application or a platform to be able to comply with those regulations. So this is going to require a wholesale restructuring of global supply chains across the board, and we're excited to be able to kind of be at the center of that.
Oh, that's indeed exciting. Okay, Jonathan, another question comes on specifically cargo chain. So how does cargo chain see their prospects in Asia?
So we, well, obviously China is the dominant player when it comes to moving goods, particularly by ocean freight. So we actually, before I joined the organization, had quite a bit of activity with PwC and Alibaba. And there was a very strong interest with cargo chain from that standpoint. They weren't really ready to make a decision on a standard just yet. But it's clear to me that if we're going to be successful, we have to be able to operate within China for sure. The company was, really incubated inside of Jade Logistics, which is headquartered in Christchurch. So we feel like we've got a good foothold in the region. So we're not trying to reach all the way from the U.S. I think that we do have a good bit of a foothold there. The other thing is that we integrate, natively with the Jade master terminal operating system. So that gives us an advantage when it comes to working with established customers in Southeast Asia.
Okay, well, that's really interesting, and let's see how supply chains globally reorganize around China or not China. Thank you so very much, Jonathan, for your time, and thanks to the jury for their questions. Let's move on now. Thank you so very much. Let's move on now to our second presenter. And our second speaker is Ted Martinov, CEO and co-founder of Karma, the world's first credit data marketplace for unbanked countries. Before we fire up the questions, we have a new poll coming for our dear public. So we have the results. Would be great to show the results of the first poll on screen for the public. And our second poll is coming, and this poll will concern blockchain. And we are going to ask you, are you a really believer in blockchain? Is it a yes and no? And actually, you don't even know what is a blockchain about. Please let us know in the poll results. Please vote. So let's give the floor to Ted. And we will open up the questions from the jury. Let's start with Mark this time. Sorry for the ladies.
Okay, thanks, Dimitri. Yeah, right. So the idea of peer-to-peer data sharing is, of course, interesting. I've got two questions. The first one is around how do you ascertain the quality, the cleanliness, and ultimately the usefulness of the data, right? And do you quality assure it, that kind of thing? So that's the first question. And the second question is around more the commercial model, right? How do you plan to scale it out? And there was some mention in your pitch about 100,000 data requests coming in by December this year. So where does that come from?
Sure. Hi, everybody. Thanks for having me. Really pleased to be here. And thanks for the good questions you shoot in the beginning. Let me start with the first one. It was about data validity, and that's quite important thing, and we do definitely take a role of validation for this data. Because when it sits on a peer-to-peer basis, nobody really knows what the quality of that. But on the other hand, you can always touch that because you're kind of still a platform, right? It's decentralized, but a platform. And our best idea so far is we're going to build the validity index. So we don't go into clean this data as it happens usually with a centralized silo. But we want to build the index that will give consumers understanding what is presumable quality of data sits on the other side. And that's going to help them to understand the value of this data for themselves. That's because basically role that we want to handle, right? We want to do this in a more open-ended solution. So we want to give the really reliable protocol for the companies to share data with each other with no borders, what exact information going to be there. So we don't focus really on trading only or KYC information or credit. Delivering that, now we just do a list of description of data just to have a common language between data consumers and data contributors, explaining what data point means what, and giving them, this common language to speak with each other. I'm suggesting you this kind of data, and you clearly understand what data is that. Now we're more focused on credit information. We designed 9 data group that contains largely 73 data points that allows lending organizations mostly, to share data about individuals and SMEs between each other. And if I covered your first question, we can come to the second one. That was more about business model. Our business model is quite simple. If you would wonder that we are a kind of internet for corporates, right, for organizations who share data to each other, we basically charge per traffic. So every time when somebody hits data in another organization, right, they have to pay this, fee for getting this information on board. We do quite well this year because we see a lot of demand that came after COVID-19, because lenders actually one of the biggest they have maybe the worst situation in that. They face the problems that they need to be very precise in credit assessment due to huge risk of over-indebtedness. We started in Zambia a couple months ago. We're quite new company. Yeah.
Okay.
Sorry, Mike is coming.
Okay,
yeah, we
thank
started
you very
in.
much. Sorry,
we started in Zambia this year, signed up the agreement with the local association of credit unions, and those credit unions literally handle 15% of the population as the members of the credit unions. And we believe that that would be, quite similar situation almost everywhere in Africa and Southeast Asia where we're going to roll out in the next couple of years.
Okay, thanks very much, Ted. Maybe Lucas, you can ask your following question.
Yeah, thanks. So why Africa and why specifically Zambia? I mean, if you look at the biggest economies, US, China, India, I think India is a fast-growing emerging economy. It's a single market you can address across all cities. I think Africa, in a sense, is still quite fragmented. So the amount of capex investments and people on the ground required will be quite tremendous compared to a single market like India. So I'm keen to know your thoughts on that.
That's a very good question. The thing is that our sweet spot is now managing credit data, exactly credit information. And US and China, they have quite strong system covered by credit bureaus. So that's why we decided to go to Africa and Southeast Asia. I mean, not all Southeast Asia, but some part where credit bureaus are not so strong and fulfilling this gap. Our solution is quite scalable, so we can literally introduce it quickly almost everywhere. And Zambia was just a special occasion. We just got a good contact, and the conversation went good. We made this signing. That's one of the biggest benefits on the business model we do, as the system goes with no center, right? Fully decentralized. We are a kind of, post office and just deliver information from one thing, from one company to another. So we don't need to place any local infrastructure or obtain any licenses to provide our services.
Okay. Now, Yasmina, maybe you have another question.
Yes, sure. So as a trade credit insurer provider and also information provider, we know that actually all our business model is built on data, and we understand the importance of the data, especially how difficult it is to get in some countries like Africa and even sometimes Australia and other countries, generally speaking. But my question is, everybody want to have alternative data, but sometimes financial institutions or lending companies, we don't know really what to do with this. And there's a lot of noise also. It's like, how relevant are the data you get from all this company? And my second question is, how do you control the fraud? Because actually the problem we may face in those countries, usually it's the fraud.
Great, great questions. Let me start with the first one. No, let's start with the second one, because fraud controlling is definitely a big issue, and that's one of our main points in the value proposition. If you are talking about fraud among organizations that supply with data, right, that's one case scenario. For this, we have quite proper due diligence process, so we take this on our side. We double check that the company is real, they have at least some natural purpose to consume or contribute data, and how big is volume of this data, and the data validation, right, that I mentioned before. And getting back to the first point, can you recap? Sorry, I guess I a bit missed it.
Yeah, so the first question, it was, how relevant is the data you get from all these different SMEs or local actors, whatever? Because you say alternative is always good, but sometimes we don't really know how to understand it. So how relevant is the different figures you may have?
Absolutely. That was also the idea why we started exactly with the credit data, because we suppose that this data will be used for credit assessment, and credit assessment usually comes through the scorecards, right? And the scorecards is a kind of some big mathematical model that do some calculation looking for the correlation between information and your internal purposes, like predicting default rate or something like that. The thing is that in this use case, your data shouldn't be super precise. It just should be, equally managed, if I can say so. So we allow the companies that are stepping into the platform to fetch some data in a pseudonymized way that's going to help them to build the score models. Right, so literally take a bulk information and can run it through their mathematical models and figure out, is there any correlation between different data points and their own loan book or something. What they try to track is there, and they can pick a particular data point they want to consume, on the individual basis to build an assessment for the further deals.
Okay, great. Thank you so very much. So it's interesting that actually you're not using specifically direct data sources, but rather modelizing from proxies. I think that's really interesting. So thank you very much for this Q&A, and we do have still some questions coming in. I just gently remind the public that they can post their questions in the Q&A chat window. And we have a question that is more general, but it's really interesting and specifically for a startup like you, Ted. The question is it harder to get investment and to get startups off the ground when you can't meet investors in person?
In my opinion, it became even easier because you can reach out to many people from your office or home, whatever, where are you? I'm at home, for instance, and my team now currently is in Africa. So I would say no. I guess that the usual behavior of people were changing, and investor is not exemption from this. So they shifted to work remotely, I guess, one of the first.
Okay.
And frankly, I don't see any difference between fundraising, before COVID and after that.
Okay, great. I have another question specifically related to your project. The question is, how many data points do you use to arrive at a credit underwriting scoring? It says that some lending fintechs have almost over 1,500 data points, 1,500 data points. How many you have?
Our position, right? We don't build scoring for lending organization. Our job is supply them with data, and they can build the score for themselves. So our position, the more the better. We want to aggregate data that comes from absolutely different industries and help lending organizations applying this data, to give them ideas what data are going to be useful for the credit assessment. So I don't have precise answer for this question, right? Because my answer is the more the better.
Okay, great. Okay, thank you so very much, Ted, and thanks again to the jury for their great questions. So before we move to our last two startup presenters, I would like to take a moment and have a look at the polls. So we've had two polls so far. One was on the tech aspects that will have the most impact on the global trade and supply chain, and it seems like the one who is winning by far is the comprehensive digitalization of trade documentation. And that's really interesting to know. And obviously, this is something that many startups are looking at, and probably we need to have a more standardized or maybe a unified approach to trade documentation when it comes online. So that's the first poll. The second poll we had was on blockchain, and it seems like we have quite a few believers. Looks like it's changing live now, so it's kind of like split half. So half of the audience doesn't believe in it, half of the audience believes in it. Okay, now it changed again. So okay, so I would say that it oscillates between a yes and a no. Some people do not consider blockchain as something that is very clear concept to them. But okay, so far we have 44% as yes, blockchain believers. Okay, that's great. It's interesting. Let's continue with the polls. Before we move on to the third startup, let's put up our third poll, which is a poll about the roles of regulators. And the regulation when it comes to technology is one of the most important things. We would like to have your opinion on this. So basically, do you think that regulators should adopt a more top-down approach or hands-off approach with regards to those evolutions? Okay, so let's move to our next speaker, and our next speaker is Kelvin. Sorry, it's not Kelvin Lim. Kelvin Fosselert. We're gonna talk with our third speaker, which is Arnoud Star. Arnoud Star, and Arnoud Star Busman. And Arnoud Star Busman is the president and CEO of MindHub, a foundational open platform for digital trade. So I will invite Arnoud to join our room now. Hello, Arnoud. Can you see us?
I can see you, but yeah, there we go.
Hi, Arnoud. Welcome to our jury room. And I am going to open up the fire with the questions. And let's start with Lucas this time.
Hey, Arnold. Thanks for the presentation. So I would like to understand more about the blockchain you're using. And because in one of your slides, you also mentioned data owners have full control over access rights and residency of their data. Does that mean they can prevent other, parties within the blockchain to, view data. So it sort of defeats the purpose of blockchain where there's complete transparency.
Yeah, I think it's a good question. So this is the way we're treating blockchain is as a mechanism, as a technology to decentralize governance of information, to take that data custodian role away from the platform operator and place it with the data owners. And the privacy is absolutely critical in our industry, not just from a commercial competition perspective, but also from a regulatory perspective. If you, for instance, working with big flows like iron ore going to China, that is a very critical market where you've got a couple of concentrated large players. So if you cannot completely protect the data, you will quickly run into competition law or regulatory concerns. So that is a core promise. And so we place the data that the companies generate is stored in what we call a private data collection. And the mechanisms that we're developing on top of the Hyperledger protocol is, and this is 2.2, is to provide quite granular access control to the data owners. So they can decide what they want to share with their banks. Obviously, some data is being shared already in trade transactions, but we need to ensure that data owners have that control. Only then can we build the trust in the network and the platform for companies to start using it.
Okay, thank you so very much, Arnoud. Maybe we can follow with Mark.
Yeah. Okay. Sure. Thanks for the presentation as well. I think because of the constraint on time, some of the factors like the technology and commercial areas were not addressed too deeply in that presentation. So maybe if you can share a little bit about, firstly, the technology, right? What is because there are many blockchain players out there and doing generic stuff. So specific for mining and metals, right? Is there any uniqueness of the tech that you're currently building for the industry? That's the first question. Second question is around the commercial model. What's your commercial pricing model and how do you intend to scale up?
Okay. I think the tech, I want to make it as ununique as possible. So we use Hyperledger Fabric protocol, open source. As much of the technology stack that we're using is open source. I think what is a bit more unique is how we limit the role of blockchain technology here. And I mentioned in the discussion as well, is to use it as a way to decentralize governance over the data. So it's not unique. What is unique is the data structures that we build on top of it and the data model. From a commercial perspective, from a pricing model perspective, there are two elements to our business model. One of them is recognizing that we're not just building apps and business functionality and solutions, we're also building infrastructure. And infrastructure that has a strong utility nature associated with it. And to make sure most utility business models converge ultimately to a cost plus structure. So we, rather than trying to fight that, we at the beginning side with our customers and want to make sure that this utility aspect is as low cost as possible, which helps with adoption, and also aligns our interests with that of our users. We charge, so we will figure out over the next 3 months what appropriate pricing is, and we'll continue to adjust that with our community through basically a user board governance model that we're establishing. The other part of the business model, though, is definitely quite capitalist by nature and looks at very specific value propositions that we can bring to users. So if you, for instance, track and trace, currently you go to the post office and you pay $10 to have a track and trace on there, right? So on the package that you send, why not pay $100 to put it on a carrier with iron ore? If we give banks a 24/7 camera on collateral that they can monitor. Maybe on a $10 million financing, they're happy to pay $25 to have the camera on there and alert them to it. So that's the those are the type of value propositions. Similarly for stock, if you have visibility over your supply chain, you see all the materials heading your way, you can manage your stock levels to just in time. So rather than having $1 billion in iron ore stockpile just to keep your operations running, maybe you can go to 800 million worth of stock, and that's a big working capital saving. So we will continue to work with our users to understand what are appropriate pricing mechanisms.
Okay, thank you so very much, Arnoud. And Yasmina, I'll let you ask your question here.
Yes, thank you, Dimitri. Actually, I have two questions. So the first one is, how long does it take to onboard a client or a partner on your platform? And the second one is, how scalable your solution is and what is the level of customization you have with your partner? Because customization is often a cost.
Okay, so how long to onboard a customer? I think the first one takes a long time to convince that this is something worthwhile pursuing and to try out, especially in super conservative industries where change is difficult because the asset heavy nature of the business, but also the commercial sensitivity of data. Now, based on the work that we have done in previous projects, not this one, we see that the onboarding is actually quite simple because we're not overlapping with an existing business process. We're not replacing ERP functionality or internal business processing systems. Rather, we're connecting them to those of the trading partners. So it's a change management, and internal transformation is not a dependency for it. And the procurement, therefore, it's cloud-based, so the procurement tends to be a bit simpler. We are going to find out how long the onboarding normally takes, but we are working with some of the, let's say, most regulated, both internal and external companies globally. And our job is to meet the highest standards of compliance. And so we can collaborate with them on creating the process to the starter packs that have enable the op risk and tech risk teams within the companies to go through it and get comfortable with what we're doing. It is API driven. We have an app so people can start using it just through the user interface and slowly migrate functionality to integrated systems as business volumes justify it. Yeah, so it's a long answer, but I think the onboarding, to give you an example, work with a small trader in the UK, and they started using it within a day. Right? Larger companies take longer. Now, in terms of the scalability, we're not building that much functionality. We're looking at data that supply chain partners share in their transactions. That's the bit that we provide tooling to capture that. So that scales across commodities. So we're not building for a specific vertical like iron ore or copper concentrate. We're looking at the common information that they share, and that is and that solution skills. I mean, currently it's a key part of what we do. We test it across iron ore, copper concentrate, scrap, all kinds of different commodities. And based on the work I've done in the past in these type of projects, looking at energy, crude oil, looking at soybeans, etc., there is a commonality that we're validating and proving out now.
Okay, thank you, Arnoud. Thank you so very much to the members of the jury for their questions. I'm getting a lot of questions from the public on MineHub. So, okay, let me choose and pick one to start with. Can you elaborate on which specific metal has the most relevant use case for MineHub? Is it iron, copper, aluminum, or gold? And how does China play a role in your growth story?
China plays a massive role in it. I think more than 50% of these flows, they go via China, either end up there or go via China. So one of our key priorities is to set up Mine Up China as well as an entity to serve the Chinese user base as it grows. So it's crucial. It has its own regulatory requirements that we need to meet. So it has a big footprint in our roadmap. In terms of the commodities, I think it's different. We are not necessarily just focused on efficiency, operational efficiency, because it has limited value. It's obvious. It's more what comes after that, and some of it is working capital related. So iron ore, yes, massive market and massive working capital employed in that market. So it would have an impact there on that side. Look at the stock levels, but as ESG agenda becomes more and more dominant in these supply chains, particularly if you look at copper, water management is becoming important, and its contribution, or it's essential for the energy transition. I think what we provide is a way to help purchasing managers comply with their ESG policy as well in their agenda, so that because we take those attributes with us. So I think on the aluminium side, it's slightly different because they tend to be integrated supply chains, quite captive between the producer and the smelter. Our solution focuses on the intersection between corporate entities, so I don't think we can compete with SAP within a corporate that effectively. That said, the post-smelter aspects then again become more interesting, and particularly if we can attach a hydrocarbon or hydro production and low carbon footprint and low carbon tags to the materials.
Okay, great. Thank you so much. I will allow myself to ask a last question for MineHub, because we're really running out of time. There are many questions. They're super good. And I hope our public can ask them offline later to the startups. I'll just pick one and to finish off. Can you elaborate on where exactly in Southeast Asia do you see opportunities, and where are your partners in Southeast Asia now?
Yeah, it's extremely global. We are very global as a team. I think there's opportunities. Singapore as a major hub. In fact, when we start rolling out our business from a legal presence, Singapore is the first port of call. Also as a base for our China operations. That's from a marketing perspective. So we've got the major mining firms have their marketing operations in Singapore. I think Indonesia is, of course, ultimately quite a big producer, so we will start engaging there. But it's quite global. I mean, on the consumer side, we're working of China. We're working with a large Japanese group as well. South Korea has a massive steel industry, so it's going to be all over.
Okay, thank you, Arnold. Thank you so very much. Extremely interesting. We are going to move on to our last but not least presenter today, Kelvin Lim. This time is right. Kelvin Lim is the CEO and co-founder of Trames, an end-to-end supply chain orchestration technology company. Before we move to that, we have the results of the poll on the role of the regulator, and by far it seems that our public estimates that it should be more top-down. Indeed, we see that there are many different standards and formats popping up across the market today. And we see that the players will expect the regulator to actually rule on a standard system or in a standard ecosystem that will allow actually the formats and the technologies to be universalized. So it's a very interesting result, really reflecting what's going on in the market today. Thank you so very much to the public for the active participation. And let's move on to Kelvin now. Kelvin, I guess you're in the room today. Right now you're in the room. And I'm going to open up the questions and ask Yasmina to open up, please.
Yeah.
Hi, guys.
Thank you, Dimitri.
Yep.
Hello.
Yep. Great to be here. Hello.
Hello. So
Hi.
actually, the presentation was very clear, and I have a question more about the team. How big the team is today? Because your to-do list is quite ambitious.
Oh yeah, great question. We started off with 4 of us. Now we are about 12 strong. We are going to go to about 20 in the next 3 months. So obviously we've been trying to grow really with our customers. So really following the kind of like value proposition of being enterprise centric, and every region is kind of different. So we are expanding out our team to serve the global market. Yeah.
Okay, thank you.
Mm-hmm. That's it.
Excellent. That was short and sweet. Excellent.
Yeah.
Maybe we can move. Let's move to Lucas then.
Okay.
Hey, Calvin. Great presentation. So I'm looking at your pricing structure. So it's a standard structure where basic, advanced, pro, and there's some sort of missing feature, and you probably want your clients to be using pro. But is there a differentiation in the, I don't know, price per shipment, or is it a recurring or monthly, or how do you do the recurring SaaS charges? And the other question is, why not make the features all available at a basic level? So in a way, you're encouraging more shipments with your clients.
Okay, great question, right? So we really do tier up our customers. So I think for the basic, standard, and enterprise versions, those are for us, because we have been working largely with multinationals. We do want to expose as much capability as possible to the smaller SME communities that we so happen to serve the MNCs with. So that's the rationale for being able to price at that kind of like a granular level, right? With regards to features, we do see us sort of splitting it up into a bit more of a value-centric model, if you don't mind. So basically, in our view, like visibility and collaboration, right? It should be table stakes. So we want to give those out as free functions. But when we do start doing our tiered pricing model, we start to charge a little bit more because we expect the users to utilize a little bit more of those functions when it comes to, say, freight invoice reconciliation, because granularly it costs them about 1% of your total freight costs. We can be optimized with the invoice reconciliation modules, and also maybe like a FTA recommendation. So if we do some form of a free trade or bilateral trade recommendation engine for importers and exporters, there is a certain cost saving that is attributed to those financial transactions. So we see us, it is a fair ask to sort of like place the user at a higher tier, because we are already, if they just do one shipment at that level, it inherently covers their monthly costs.
Okay, thank you so very much for your answer. Before we move on to the final questions from Mark, I would like to kindly remind our public to post their questions in the Q&A chat regarding cargo chain, regarding our last presenter, Trames. Please post your questions here, and I'm going to launch the last poll today, the last poll for the public. And this poll will ask you to vote for your favorite startup that you've seen so far across the 4 presentations. So please vote for your favorite startup as we're finishing this hour. And please post your questions on Trames as we are moving to Mark. Mark, please fire up your question.
Thanks. Hi, Calvin. I've got 2 questions. In this space, especially when it comes to your target market, which are the shippers, right? Many of these shippers, especially the MNC shippers, have some form of control tower or another, right? And so, what's your angle that you use to pitch to a shipper who already has some form of a control tower to instead use your capabilities? I think that's the first question. The second question is more a partnership type question, right? So what's your partnering and channel strategy? Besides AIS data, do you work with IoT providers for providing more real-time information, right? And you also alluded to working with R3 and Trade Trust. What's your plan there as well? So 2 questions.
Hey, thanks for the question, Mark. So I think first on control tower, right? I think that was one of the first questions that got posed to us by a multinational as well when we first approached them. So we basically went for the most digitally progressive multinational to try and incubate our project with. So they essentially had about a handful of control towers all over the region. So the main problem statement that we were trying to solve was, control towers give you good a snapshot on your current operations, but it doesn't really build an inclusive nature across your partners. That means what this means is like, MNCs, they invest in control towers, they're able to pipe data across all the different maybe pod-to-pod providers, but that benefit only flows back to the multinational, right? For us, when we pitched our solution, it was of an inclusive model. So to be able to work with the multinational to design processes and also say documentation sharing capabilities across the entire network, because in supply chains you have you come across companies of different sizes, right? You have like your shippers, you have your forwarders, well, multinational in their own nature, but they do have to work with local companies like your haulers or your custom brokers, which are very much they only operate in a region. So the investment in technology is not harmonious across all the different stakeholders. So when we pitched to the large multinationals, it was coming from a way to say, hey, we will want to build these capabilities for you. You will have some cost savings, but you know what? We will be providing all these other services for the rest of your value chain partners, so that they can all upskill and be able to serve you a lot better. So I think that was kind of like the tipping point that kind of leveraged it in our favor. The second part on data collaboration, also like say maybe protocol collaboration and partnerships model, we do look at the entire partner ecosystem. So I think you mentioned R3. So for us, we don't see ourselves as a small company based in Singapore. We won't be able to build all the features and functionalities to handle global financial markets or trade markets as a whole. So we do really work with a lot of data providers. The problem statement that we're trying to solve, right, is not to just solve one specific pain point. I think we look at supply chains as a greater sum of its parts, right? There's a lot of great innovation happening at many segments. So it'd be your port technology, your custom technology, or even your carrier or shipper technology, where Trames comes in, and it's our ethos, right? It's in our name. It's called transmission of messages. So the idea is to be this mesh, right? To be able to tie together all the different data providers and perhaps even like value offerings that might come from adopting certain protocols and standards to provide greater value to our end customer. So that's always I would say our checklist, or how we weigh whether or not we want to partner with someone. Yeah. So hope that answers both questions. Yeah, and it's really great to be here. Yeah.
Okay. Well, yeah, that's a very clear and interesting answer. Indeed, it's very important to to approach the ecosystem of the supply chain as a whole, and really try to spread the technology across the whole value chain. One of the key points of learning today for me as well. So thank you so very much, Kelvin, for your intervention. I am going to switch now to the questions from the public. So we have quite a few again. That's great. Thank you so very much for your very active participation, dear public. And by the way, we have a great turnout today on this live session. We have like close to 100 people live now watching this session. So it's really amazing. So okay, so the question I'm gonna pop up to you and follow up with others. What commercial synergies with supply chain financiers and bank lendings can Trames envision to have?
Wow, that's kind of a loaded question. But I mean, like for us, we really
well,
do
look our
at,
public is very smart and asks about the question.
I mean, we're mainly working on sort of like productivity initiatives as of today. So a lot of things having to do with, say, milestone tracking, or we're really at the physical goods and information layer. I think a lot of trade tech has, or fintechs are on the financial services layer, right? So obviously we hope, and we do see some of our data being used in some form of financial sort of like KPI tracking. So for example, I mentioned earlier, invoice reconciliation. There is also some form of like FTA governance tracking that MNCs do really well, but maybe small to medium enterprises don't, right? With regards to trade financing or LC financing and OA, I think it's still early days for us. We do really want to do what we're good at, and our core is, being able to build this connective bridge and applications to sponsor out the entire trade and transportation ecosystem. But never say never. I probably would say that I'm not too educated, or we have not pushed that matter that far ahead as of now. We're only about a year and a half, so hope that satisfies the public's like curiosity. Yeah.
Okay, and I'm going to ask you one final question. And meanwhile, kindly remind the public to continue their voting on their favorite startup. As I can see, the poll is already filling up, and the results are really interesting. So the suspense and surprise will come out later on. So I'm gonna ask you one last question, and that question is more of a general one, but is kind of like very relevant, I guess, to our current context. And so the question is, how does a tech startup approach, or how should it approach the traditional and non-tech savvy demographic on the backdrop of lockdown and global slowdown caused by the pandemic? And I think that's an interesting question. I mean, all the startup presenters can answer that, but let's have you on this.
Yeah, I mean, it's a great question, right? So I mean, like with the pandemic, I mean, there are a lot of operations and like say work hours get disrupted, physical flows get disrupted. We see a lot of I would say impact to like say manufacturing or even our clients' own supply chains, right? So in the traditional sense, a lot of people are looking to do things 100% digital. So even for us, our platform, being web-based and being able to work as long as you have an internet connection, the goal would be to try and orchestrate entire, transportation and trade digitally. Obviously, we aren't able to do that as well because there are still physical docks associated with our global trade ecosystems. So that is probably going to improve over time. But as a technology startup, maybe approaching, traditional business, you really have to look at specific portions of the business that technology can come and do it cheaper, faster, and at a more trustworthy pace, right? So a lot of ML applications, a lot of blockchain applications are fundamentally do that, right? So I don't think it's more of like looking to use technology to do away with all the physical or human work. It's more of like, how do you augment them, right? So how do you make staff more efficient? How do you build revenues, or how do you improve your cost savings? And if you always approach it with that kind of like mentality, you will kind of you'll find your place in the industry, I guess. Yeah.
Well, I hope you're right, because we are still dealing in a very, very paper-based world. As a matter of fact, I was talking to an ex-banker colleague of mine who was telling me that traders in Asia are still using fax and paper to perform their transactions and payments. But I mean, definitely, what you're saying makes sense, and hopefully it will boost forward the adoption of technology across in this world of supply chain and trade. I'm getting more and more results on the poll regarding the most favorite startup voted as by the public. I'm going to announce it just at the end of this session. We are closing to the end, and the results will come in just as I sent out from the session. So I think we are reaching the final stages and the conclusion. Just before I go to the conclusion, I want to make sure our honorable members of the jury have no more questions to any other startups that they or this startup that they need to be answered. Are you all okay, guys?
Very good, thank you.
Thanks. Okay. Lucas and Yasmin also good?
All good.
Okay,
Good.
great. Okay, excellent. So, well, I've been, noting down, jotting down some notes during this presentation. I personally have learned a lot of things and a lot of interesting, insights to how this technology world is evolving, especially for supply chain and trade. So it's been personally a very valuable session to me, and I hope it was for the jury and the public. So I think one of the main points that I will pick up from this is the capacity or the importance to share the technology across the entire network or the ecosystem and value chain of traded supply chain. And we've touched on this across many questions and points. We've discussed about integrations. We discussed about legacy systems. One of the polls was talking about how there should be regulations imposing some standard solutions, and basically it boils down to having a technology that is widely adopted, can be integrated easily, and basically spread seamlessly across the network and the value chain. So I would say that this is one of the big learning points. I mean, at least for me. The other thing, obviously, we see that across all the presentations, China is obviously playing a very important role in the restructuring and the evolving of this market in terms of technology. And I hope this massive role will be tackled by the startups. Another point that we that I saw is the importance of data and control, and I think this is really very relevant when we talk about information flows and how those information flows are shared across the network. How do we get the data? How the data is accurate, and how do we control it's not fraudulent? I think it's very important. One of the other points I think for the adoption of technology today is, of course, and it's been seen in the questions, is how people who are not tech savvy can take over this. What's the cost of this technology? And we're talking about low cost technology that can boost adoption. So those are points I think really interesting. I mean, among others, I mean, there have been so many interesting things. And maybe I will give, I've been talking too much. Maybe I will give the jury maybe about 20-30 seconds each to maybe synthesize as well, give a sum up of their personal sum up of this session. Please, and just to Yasmina, I think you will like it, but let's start with you.
Yeah. Okay. So first of all, you see, COFAS were in the business for almost 1 century. And so we understand that the key elements of success are innovation, transformation, agility. And it's like, without this, we cannot survive, especially now. So first of all, I would like to thank all the attendees for today. I really believe that we have seen a really great ideas, a great project, and somehow they may change the trade and the future of the trade. I really hope so. And yes, the data is important, but the way how we control the data is even more important, especially fraud. We've seen a lot of fintechs who have managed it, sometimes in a good way, sometimes in less a good way. Technology, scalability of the project is also important. So I learned a lot of things today, and thanks you guys again.
Thank you, Yasmina. Maybe we can follow with Mark.
Yeah, thanks. I think today's session was quite interesting. Good quality startups. Of course, the 10 minutes didn't give them justice in terms of the kind of work that we have on the back end, but there's a time constraint. But I think in the grand scheme of things, through both their pitches as well as the Q&As, I think a lot of the business models and technologies and the answers sort of came out through there. So I think kudos to GTR for getting the format. I think quite spot on. Digitization definitely is top of mind. All of the startups today were all talking about digitization, right? A lot of them were talking about data and knowledge sharing, right? And I think while there were some general platforms, a lot of blockchain players, but I think one of the most important things is to understand what is the differentiating value proposition that each of those startups are trying to build, right? And where's the moat? Is it the technology side of things? Is it their business model? Or is it just a pure scalability kind of a thing, right? So, and I'm quite happy to see, we see a blend of both interesting ideas, see a blend of deep industry expertise, as well as good use cases that sort of shines through the sessions today. So quite happy about it, and thanks for inviting us as well.
Thanks, Mark. Thanks for the sum up. And last but not least, Lucas.
Yeah, first of all, congrats to all the finalists. Excellent presentation, and thank you, GTR for inviting us today. So it's great to see, quite a number of teams embracing blockchain and using that as a platform to work with big conglomerates, traditional players in the shipping industry, in the trade industry. So I think we are moving forward, given the COVID situation, we're going to see more automation, across these industries to remove the need on perhaps less reliant on legacy systems, as well as less reliant on label. And we're going to see blockchain playing a great part in moving and sort of accelerating the growth. So I'm glad to see quite a number of teams embracing that, and hopefully we can see a strong use case beyond 2020, from 2021 to 2025 onwards, that we have big large technology player or a technology startup that use blockchain as the foundation to work with all these shipping companies, trade partners, and improving the trade financing and trade supply chain globally.
Thank you so very much, Lucas. Thank you very much to the jury. It's been a great session. So before we sign out, I would like to, and I will announce the winner of the public vote in a few seconds. Before we do that, I would like to kindly ask our tech team to post a link to a satisfaction questionnaire. This questionnaire will help us understand, how you evaluate this event, what we can do better for the next time, and how we can improve ourselves. We'll be really, really glad if you could fill up this questionnaire. And for those who fill it up, GTRV is going to pick up 10 participants, 10 people who fill this questionnaire, and will offer them GTR digital subscription. Sorry. So though 10 participants who filled the questionnaire will receive a GTR digital subscription. So please do fill the questionnaire. It will be of great help, and you will be receiving this digital subscription for 10 participants. And now, finally, I am going to announce the winner of the public vote. And before I do that, I want to say that the quality of the startups was extremely good. It was really excellent. I think the world of trade really needs more of startups and peoples like that to advance the technology, to improve the trade, improve the resilience, the transparency, and inclusiveness. So kudos to all the startups. So the winner is Trames. Trames has been voted at almost close to 50% of the public votes. And again, I mean, the other presentations were extremely good. And I would like to congratulate specifically now Trames for winning the public vote, knowing that the others were extremely good as well. So please tune in when the jury announces their own choice of the startup. The announcement will come at 4:50, and there will be a networking breakout sessions at 5 p.m. And that's it for now, and I will see you soon, and you take care, everybody. TradeTech signing out. Thank you.
you.